Hey everyone, this is Dan with Theta Trend. Today is Friday, February 26, 2016. It's about 2:25 p.m. or so Mountain Time. The market's closed half hour ago. Well, we're taking a look at a daily chart of the Russell 2000 index here. The RUT, the market closed today at 1037, some change, up about 0.54%. And we just had a continuation today of this uptrend that we've seen off of this 942 level from back in early February. And that continued and took the market all the way up to the top side of the box that we've been watching up around 1035 today. And we even closed slightly above that level. So that, it has been a pretty constructive week for the market. We had a little bit of the pullback, the shakeout here on Wednesday. They probably drew in some shorts, scared them, and then squeezed them out as we've moved up higher. Again, the market is coming into an area where it might find some potential resistance. It has the declining 50-day simple moving average here. There's a declining trend line here. But that doesn't mean that the market can't get up here and hold above this level and continue higher. We'll take a look at some other levels down on the 65-minute time frame where the market might want to pull back to if it wanted to continue this move higher. But certainly it can surprise all of us, and we're not going to predict it. We're just going to react as price plays out. The horizontal blue lines that we're looking at here represent the expiration break-even points for the April CIB. And that trade's open, and we'll take a look at that at a moment. The upper expiration break-even is right around the 1040 level, so sort of, right where the market sits today. I think the market pushed up and around, maybe even slightly outside of the expiration break-even at one point today, but it didn't quite get there. I've been kind of watching more, probably a little bit closer to about the 1045 level to make an adjustment. I just want to make the market really prove itself. When we get really extended like this on the upside within the context of a downtrend, my concern is that if this is a fake move or the move doesn't have follow through and we go tumbling lower, it's going to be a lot easier to move the position lower if it's a smaller trade rather than if it starts adding into it a lot on the upside. So I really want to believe that the market's pushing up and through here before I add to the position. Let's go ahead and drop down to the 65-minute time frame. So in the 65-minute time frame, we've been watching a few different levels, and yesterday we talked about this. We said it seemed likely that the market, since it closed so strongly, was likely to come up here and at least test this 1035 level. And we saw that essentially within the first hour of the day here. Each one of these bars represents, or each one of these candles is a 65-minute candle. So today's candles begin right here and end right here. And we saw the market push up and through that 1035, 1037 level and then just sort of back off. But it was really, if you look at the 5-minute time frame, it was really just kind of a choppy day in here, where the market opened higher and slopped around essentially. There wasn't a lot of directional conviction higher or lower. It was just sort of back and forth around the volume weighted average price kind of all day long. But the market did close up here. It closed up and above that 1035 level, and that is somewhat constructive. I have some concerns about the market's ability to continue higher here in the short run, but certainly I don't get to decide that, and it can do whatever it wants. And going into next week, one of the first key levels to keep an eye on is going to be the low from today, which is probably down around 1033 or so. So if the market falls through there, we would expect to maybe see it find some support here around that 1025 level, which is also going to correspond with the rising 5-day simple moving average. So if the market can pull back to there, kind of hold that level, then maybe it has the potential to push a little bit higher up into that 1045 level or even further still. It also has the potential to gap and go and just really catch everybody off guard. We certainly don't know what scenario will play out. If we see the market pull back and fall below this 1025 level next week, then the next kind of key level is going to be in this 1017 to 1020 area, and that's this bigger, darker box here. So if the market starts violating these levels on the downside, then we're going to become more concerned that maybe the shorter term trend has shifted. At that point, breaking down below this 1020 level is going to put the market down below the 5-day simple moving average. Lower than that's probably going to take it below the 10-day as well. And if it tries to rally back up, find resistance, it may find some difficulty in getting higher and continue to sell off lower. So on the downside, those are some of the levels we'll be watching, at least in the short term, around the 1025, 1020-ish area. So let's hop over and take a look at the trade as it sits right now. So we closed the day here at 1037 or so, and that's the center price slice. And so I have the price slices set to 3% below the current market price and then 1.2% above. So if we were to have a gap open first thing on Monday morning, we'd be looking at, price up around 1050 if we had a 1.2% gap. If we gap lower 3%, it would bring the market down to about 1,000 or so. Just a little bit above 1,000. As the position sits today at the close, the delta is negative 5.63, the gamma is 0.01, the theta is $9, the vega is negative 19, and the open loss on the trade is about negative $80 or so. This is a two butterfly position right now, so we have two of the 104 IWM calls, and we have two of the 950, 1000, 1050 RUT put butterflies. So this is twice the size of the trade last month. So to put that into context, if this was a single position, the delta would be about negative 2.8 or so. Gamma would be negligible. There would be about half as much theta, 450 maybe. And the open loss would only be about negative $40 or so. One of the things to point out is that with this move higher, if the market is to turn around and move back down, we'd expect this position to come back into the money relatively quickly. So in addition to the fact that it's short delta, we'd expect the implied volatility to pump up this upper long a little bit, and the trade would be fine on the downside, really all the way down probably to 960, 965 or so. Coming back over here to the 65-minute time frame, that's really towards the lower side of this big consolidation area, from about 955 up to 1035, or on the daily chart, 965 is, down here. So we have quite a bit of room to move on the downside. If the market continues higher next week, what we're going to be looking to do is to add on the 1020 centered butterfly. And I think I may have that. I guess I don't have that one set up here. Let's go ahead and we'll set that up. So if we were to look at the 1070, 1020, $970 butterfly, it would do something like this to the position. Okay, so that stretches out our expiration break even, and we might also look to pick up some of these IWM calls that we have sitting here. So if we picked up a couple of those 105 IWM calls, we would end up in a trade that looks sort of like this. And I'm going to just go ahead and switch back to RUT since we talked about price levels in terms of RUT. But if we were to make that adjustment, that would give the trade a little bit more room to work on the upside, kind of up into that 1050-ish level, something like that. But for the time being, it doesn't seem like it's super necessary to make that adjustment. On the downside, that would reduce our room to run up into the 970s. And so that was one of the reasons that I was just sort of letting the market really prove that it wanted to head higher here before making that adjustment. And if it does do that on Monday morning, certainly we'll just go ahead and make that adjustment. Even if we were to gap all the way up to 1050, we'd be looking at an open loss of about $150 or so on the two butterflies. So it's really not even that significant at this point. So I'm willing to let the trade work a little bit and just see how things shape up on Monday morning. So that's all I have for today. I hope you have a great weekend. If you have any questions, feel free to shoot me an email, info@thetatrend.com. Thanks for watching.